Okay, you guys, we're now going to work in Chapter 7, dealing with cash and receivables. We're first going to look at exercise 7.2. And they want us to determine, they give us several trial balance accounts to choose from, and want us to determine the correct balance of cash and cash equivalents to be reported in the current asset section of the 2016 balance sheet. You guys, a company may have several different accounts in the general ledger whose balances would be combined into one amount and shown as cash on the balance sheet. For instance, they could have a cash checking account that they use for operations. Could have a cash checking account that they just use for payroll. Maybe a little cash savings account, some petty cash. All of those would have a separate general ledger account, but their balance, and they'd all be shown separately on the adjusted trial balance. But their balances would be added together and shown as one number, cash and cash equivalents, on the balance sheet. Now, as far as cash equivalents, if you look on page 362, they give you a definition. It says cash equivalents include money market funds, treasury bills, and commercial paper. To be classified as cash equivalents, these instruments, then this is important, must have a maturity date no longer than 3 months from the date of purchase. So if their original maturity is 3 months or less, then they're considered cash for balance sheet purposes. Okay, so Delta Automotive Corporation has the following assets listed in its 12/31/2016 trial balance. We'll assume that's an adjusted trial balance. They have cash in the bank, checking account 22.5. U.S. Treasury bills which mature in 60 days from the end of the year. Well, that's less than 3 months, but note they were purchased at the end of November. Well, that's an original maturity of 3 months or less from the end of November, and then 60 days from the end of December. So that's an original maturity of 3 months, looks like. Cash on hand, currency and coins, that'd be maybe like petty cash. U.S. Treasury bills which mature in 6 months, also purchased on the last day of November. And then undeposited customer checks. We're going to assume those are good, you guys. We wouldn't have taken the check if we didn't think it was good. And I know you get burned on those sometimes, but undeposited customer checks, we'll assume those are going to clear, and we'll count those as cash. So what we would want to count here, well, number 1 says determine the correct balance of cash and cash equivalents to be reported in the current asset section of the 2016 balance sheet. Okay, well, there's only one we would leave out, and that's going to be your U.S. Treasury bills which mature in 6 months. Of course, we would include cash in the checking account, and cash on hand, and the undeposited customer checks. I mentioned already we would include that one. The only two you have to wonder about are the U.S. Treasury bills. Well, the ones with original maturity of less than 3 months would be included as cash. That's the first ones listed, the ones that mature in 60 days, purchased at the end of November. So they had original maturity of 3 months. The ones which mature in 6 months would not be included as cash and cash equivalents. So we would include all the others. We'd add their balances together, and we get a total of $30,690. Now, with number 2, for each of the items not included in your answer to requirement 1, explain the correct classification for the item. Well, the Treasury bills which mature had an original maturity, looks like, of 7 months, mature in 6 months from the end of the year. They would still be a current asset because they're going to convert to cash within less than 1 year. But we'll call them short-term investment or temporary investment is what they go with. It's definitely a current asset. Okay, after working that one along with me, I don't think you'll have any trouble with exercise 7.2 on your Connect Plus site. And good luck with it. Thanks.